Welcome back. A major crypto crash is underway as we are seeing many of the top cryptocurrencies and other assets throughout the financial markets coming down fairly substantially here at the end of February 2025. You can see Bitcoin down from over $100,000 down to 87,000 when I'm recording this video, with many altcoins following suit, including Solana. Now, if you guys missed on the channel the other day, I did a video. I think the thumbnail said the Solana drain game, and basically was about all of the nonsense that's been going on with the Solana meme coins. This was going to draw a lot of a lot of money out of Solana and into other assets, and so that is what we're, I think, in the midst of seeing. And in some of these market rotation phases, and by the way, there's a lot of other things at play, including some of the things happening in the financial markets, some things happening with the ETFs, MicroStrategy, and other things that we're going to be covering all of this in today's video. So make sure you guys are subscribed, give the video a thumbs up, and let's get right into today's topics. And yeah, so back to the Solana drain game, right? I believe that we were going to see a drain out of Solana. No, I didn't think that we were going to see a market-wide crash, and this is not really a crash. I mean, you can see the 7-day averages. Bitcoin's only down 8%, Ethereum's down 9%. So the higher we go in price, the larger the moves are going to seem, but they're actually not that big in comparison, right? These are not even 20-30% moves just yet, except if you look at Solana. Solana is down significantly more. Dogecoin is down significantly. And so what is going on, right? Well, we just covered what happened with Solana, right? Solana scrambles to adjust after a $22 billion meme coin wipeout. There's been so many ridiculous things that happened with Solana meme coins that we're not even going to discuss it, because this really is not what crypto is about. This is not what investing is about. This is not what building value is about, right? I mean, you could build value with a meme coin, but we didn't see any of that in the recent meme coin situation, right? And so we've had $1.4 billion, almost 1.5 billion in the last 24 hours from when I'm recording this video, liquidated from crypto markets. And what's also really important about this $1.4 billion number that got liquidated, we also had a $1.4 billion hack from Bybit. And then they took out a loan to cover their customers until they could pay it back, and now they've paid it back. Now, we're going to come back to that in just 1 minute here. But Marty Party, who is, I guess, a crypto trader on X, host of Spaces, 194,000 followers, he posted this chart which shows the previous cycles and where we are in this cycle, just in terms of days from the halving, right? Because the halving is really, in the Bitcoin world, kind of the benchmark for when the cycles begin and when the tracking of the cycles begin. We've covered this before. What's interesting is every single cycle you see that the amount of returns, right? The index price. This is in a log scale, so this shows the basically the percentage of gains. Every single cycle, we've had less and less gains from the previous cycle, and we've talked about this before. I think it's called the law of diminishing returns. But as time goes on and more participants get involved, and there's more mechanisms in play, you can start to get stability in the valuation, and the values don't move as much or as violently to the upside or the downside than you saw previously, because you have all of these other mechanisms, and the coins or stocks or equity is a little bit more spread thin versus, a few holders kind of moving the majority of the liquidity in the market. So he said in this post, he said, lining up with my previous post, we can see where we are in the cycle, right at the bear trap. Don't fall for it. So you got bull traps and bear traps, right? A bear trap is where people believe that we are entering a bear market, and then they sell their entire portfolio, and then we move majorly to the upside and they lose out on all of that. And a bull trap is the opposite, where you dump all your money in and then the market just keeps falling, right? And so understanding where we are in the cycle, we are still fairly early in the cycle, right? But the majority of the cycle that we see happens in the 12 to 18 months after the Bitcoin halving. So what Marty Party is saying is potentially that this is a bear trap, and that these moves to the downside are predicted and it should be expected, and we're going to see this lead to major moves to the upside. And so he wrote more explanation here. People, we've had a Bitcoin rally since 2023 on no quantitative easing. Now, no rate reductions, no liquidity injections, just on institutional entry into the ETFs. Now, what's important to remember is like in the bear market, Bitcoin was at $18,000 at the low or $15,000 at the low, but really in the $20,000 to $30,000 range for most of the time. We're 4x that, right? And we were 5x that. And so if you didn't take any profits, like we've been talking about, what are you investing for? I'm not saying wipe your portfolio or liquidate, but taking profits is really important. And so yeah, I mean, if we understand where we are in perspective, we have been in a bear market, right? Now we're going to be getting back to the Federal Reserve in just a minute, what they're doing with quantitative easing or quantitative tightening. But Marty Party's right; like there's been no catalyst to drive the market higher besides speculation that we're entering uh, where the Federal Reserve is going to ease up. Now, in my view, like I've said, during the election year, I thought that they were going to pump the markets. I thought they were going to have liquidity injections. I thought we were going to have rate cuts and quantitative easing because I thought that they would want to do that to kind of drive the vote in their direction. That's not what they did, which was very interesting to me. And now the Federal Reserve said in January that they were not going to cut rates. And the president said, yeah, we don't need to cut rates right now, which was also interesting because he seems like more of a let's cut rates kind of guy, right? So it's all about posturing with what the Federal Reserve is going to do, when they're going to start printing money. Now, Marty Party said there has been no bull market yet. The altcoin rally and bull market have not even started. Wait for the Fed. Don't fight the Fed. The Federal Reserve, right? The central bank, the most powerful bank in the world, right? Because they have the printing press, right? When the US announces a halt in quantitative tightening and a beginning of stimulation or quantitative easing, now while the FUD campaign is in let me restart that. When the US announces a halt in quantitative tightening and a beginning of stimulation and rate drops, there will be a bull run. Your job is to accumulate now while the FUD campaign is in full force and sentiment is low on no free money and degenerate gambling, aka the meme coins. Your exit is at the end of quantitative easing, not here. Don't F this up. Same thing that we heard from Raoul Pal, right? Don't F this up. The short-term price moves is not what we're looking at. We're looking at the kind of longer term. And granted, they can start quantitative easing this year and do it for 2 years. Do I think necessarily that the Bitcoin is going to go up straight for 2 years as I continue quantitative easing? No, and let me explain why. Because once we get the idea of what the Federal Reserve is going to do and kind of what their strategy is, I believe once we start to see quantitative easing, which we're kind of seeing, we kind of saw small rate drops. I think they did 0.5% rate drop, which didn't really do anything. But the speculation alone is going to price it in. And so I think that a lot of that is going to be priced in this year, in the middle second half of this year, once they actually do kind of indicate that they're going to end quantitative tightening. And by the way, they are still tightening. I mean, you can look at the balance sheet of the Federal Reserve, and they are still making it smaller. Making it smaller means they're selling it off, right? And so they're not buying things up. They're not easing. They're tightening still. You can see all the way up into the middle of February. We went down to 6.7 trillion from 6.9 trillion just a few months prior. And so Martin Party continues. He says, since November 4th, we've had a Trump pump and it got sold off by exchanges, selling their altcoins to pay their fines and bad debts and paper hand retail following them. We are back to pre-November 4th pricing. That's how this works. March 19 is the next FOMC or Federal Reserve meeting, and we will see the tone and announcements then. Also, middle of March, we have the budget is due for the federal government. And so they may spend a little bit less. Keep this in mind. They may spend a little bit less, but because of what they're doing with Doge and saving more, this may kind of draw the narrative as well. So if the budget kind of gets passed and it's maybe they're going to end tax on tips, this is going to be better for the economy, right? I'm saying the general economy. If they do $5,000 checks or something similar to people in the budget bill, this is going to be very positive. That's 5,000. Remember during the pandemic, they gave $1,200. and people were buying TVs off, like you could not find TVs in the store. They were buying TVs off the shelves. Imagine $5,000, even with the price increases, right? I mean, you can go to Best Buy today and you can see a $300, 80-inch TV. Imagine what that would do. And imagine what that's going to do. Yes, it may cause some inflation down the road, but imagine what this is going to do for the equities, for stocks, for crypto. I believe that it's going to be significant. And so, yeah, what Marty Party's saying does have some credence to it. Whether we're actually at this part of the cycle, and by the way, people are going to still think that we're going to go all the way up to here, even though I think we'll probably come lower than we did in the 2024 cycle over here. So we'll probably come, maybe 50%, 75%, 200% higher than where we were at the top already. So maybe about 200, 225,000 max based on the charting of it. Again, this is just my opinion. I could be wrong. We've done videos recently where people are talking about $250,000 Bitcoin, $500,000 Bitcoin, $2 million Bitcoin. I don't know. But the other thing to keep in mind is what else is going on, right? Bybit has returned a 40,000 ETH loan in just 3 days. So they repaid a $104 million ETH loan days after the $1.4 billion hack. Now remember, the $1.4 billion hack and then what got liquidated in 24 hours, $1.4 billion, right? So that's important to keep in mind. Also, Bybit, they're returning all this money. Where did they get the money? But beyond where did they get all this money, right? The fact that they're buying 40,000 Ethereum and the market went lower. Now, granted, this was a pan sell-off, right? Everything in the market went down. But does that mean that right now Ethereum is highly undervalued because they just bought 40,000 ETH? Maybe, maybe not. But what's also important to remember, I'm recording this the day after MicroStrategy announced a $2 billion, I don't know, some kind of debt issuance for $2 billion, and then they bought 20,000 Bitcoin with that $2 billion. So MicroStrategy bought massive quantities of Bitcoin. Bybit bought massive quantities of Ethereum, and the price of the market went down. How does that happen? How does this work? Well, we can take a little bit of a further look into Farsight Investors. Every single day they post the Bitcoin flows into and out of the ETFs for Bitcoin ETF and also Ethereum ETF. So again, at the beginning, so this was on Monday. So Monday, the price of Bitcoin was still at about 90,000, 95,000. Let's pull up the 7-day chart. Yeah, you can see here, it started, the drawdown started on that Monday from 95,000 down to where we are, 87,000. And so Michael Saylor bought, Bybit bought. What happened with the Bitcoin ETF? Well, Bitcoin ETF's $516 million was pulled out of the Bitcoin ETFs, which also means that they're selling the Bitcoin underlying those shares, which is basically $516 million worth of Bitcoin they're selling. They're selling. So granted, it's not $2 billion, but remember what I've been saying recently. We have to start seeing where the price activity looks after MicroStrategy buys, because it seems like every time after MicroStrategy buys, the price goes down, which is interesting, but why is it going down? It should be going up. That's what you would think from a supply-demand metric, unless what I also think is the algorithmic trading bots, they see that there's no more inflows coming in and they're like, okay, the price should be lower because we don't have any inflows. That could be as well. But it is interesting because if you look at the charting, right, this is the chart from basically the beginning of February to now. You can see the most that we've seen come out of the Bitcoin ETFs was 251 million, 156 million. This was at the beginning, right before Valentine's Day. And then after Valentine's Day, we've been seeing more significant outflows. We've been seeing more outflows than inflows. So as much as I would like to say, yeah, this $516 million is to offset those purchases that MicroStrategy was doing, I don't think so, because the days before there was also massive outflows, $364 million, $64 million, $60 million. Why is there so much outflow of the Bitcoin ETFs? I don't know the answer to this question. I don't. Maybe this is an indicator of where the market is going to go. So when we see this kind of trend of outflows and the price of Bitcoin is somewhat stable, maybe we should start saying, is the ETF ecosystem telling us that the price is going to drop? Because that's what it looks like. Now, again, this could just be a 1 day, a 1 week, a 1 month kind of major drop in the market, and we should expect these moves in the market. But it's also important to understand like why we're seeing these moves in the market. So understand that the liquidations that occur, these are market sell orders. So when we see $1.4 billion wiped out or liquidated, the money is not actually just disappearing, right? This is really important to understand. The money doesn't disappear, right? So if I am trading on leverage, and let's say I buy, let's say I'm playing on 10x leverage, which overseas you probably can do. So let's say you're doing 10x leverage. That means I put in $10 and I'm buying $100, right? So I have the $90 kind of margin. That means that if the price comes down 1%, right? Yeah, or 10%, that my entire position is going to get liquidated, meaning it's going to be sold at market order. So somebody's on the other end buying that market order. And one of Marty Party, what he seems to be alluding to as well, is that there is some manipulation going on in the markets with Binance and Wintermute and maybe Kraken as well, because they're seeing a lot of Solana and Ethereum moving in and out of Wintermute. I don't know exactly what that means. It seemed like what he was saying was that there is some type of manipulation going on because of these dynamics that we're talking about, the ETF inflows, the outflows, and the liquidations. $1.4 billion in liquidations, and boom, Bybit already paid back their loan. I don't know. It's just interesting. Is there actual manipulation, or are these just theories? Probably just theories, to be honest. But it is very interesting to kind of go through and walk through and understand all of the dynamics at play, because then you can kind of understand if you start to see the same dynamics at play again, we know potential downside risk. Again, I kind of agree with a lot of what Marty Party is saying here about the quantitative easing, quantitative tightening. Everybody was very excited, and we had the Trump pump. And then in January, the Federal Reserve said, no, we're not cutting. That was kind of like putting a damper on the Trump pump. And that's exactly what we're seeing happening in the markets. And it feels a lot worse than it actually is by coming down to 86,000 from 100,000. It's really only a 15% drop. I mean, I remember the days when Bitcoin went from 10,000 to 1,000, back to 10,000, down to 3,000. Can make a lot of money on the swings, but it also wiped out a lot of liquidations. And a lot of these liquidations, keep in mind, because they're market selling, and then it creates more liquidations, and then those positions market sell, and then we get a cascading effect. Number one, that's why you have circuit breakers in the stock market. But the other thing to keep in mind is that means that the price discovery is not real, right? It's just based on over leverage getting wiped out. And so once all the over leverage is wiped out, then the smart investors start buying up those little chunks that are available for 86,000 or 80,000 or 70,000, however low we go. And that pushes the price up fairly rapidly. And then you often, after major drops, I don't know if 15% would be considered major. But if you look at like Solana, for instance, Solana has come down 50%, 50%, in basically a month or two, since its all-time record high, or I should say, all-time record high, $260 end of January. So from $260 to where we are now, $140, or at the low $130, it's basically a 50% drop, right? So how does this price go back up? Because now it needs to go up 100% to get back to the all-time record high. I don't know that it is. I think there's going to be more downside risk in Solana than other assets. But again, 50% drop, this could look really bad. But if you have a 50% drop, maybe you're going to have a 200 or 300% run afterwards. Could happen. Could happen. And so there's a lot of other things going on in the markets that are also very positive for overall crypto, but there's a big but. This can also lead to more kind of large scale players manipulating where the market is, right? Through whether it's ETFs or buying and selling on the market, or what we saw with Robinhood, right? Where they shut off buying and selling for GameStop a few years back so that the hedge funds can go in and move their positions before they get liquidated, right? Can't let the hedge funds get liquidated, but you can get liquidated. So Citadel Securities is eyeing market-making role for the crypto exchanges. I believe Citadel is the market maker like behind Robinhood and stuff like that. Anyway, market maker Citadel Securities is reportedly looking into becoming a liquidity provider for major crypto exchanges, pivoting from previous cautious position on retail crypto trading. The firm is looking at some of the industry's largest crypto exchanges. They initially planned to set up market making teams outside the US. Why would they do that outside the US first? Maybe to liquidate those overseas exchanges. That's possible. That way the US can come in and save the day. That's possible. It comes as US firms anticipate a market boom under this administration. However, the extent to which Citadel becomes an active market maker will depend on how regulatory environment shapes up in the US over the next few months. So, yeah, I do think that generally speaking, like things are going to take a lot longer than we anticipate. The Bitcoin Strategic Reserve, regulation on crypto, legislation on crypto, I think it's going to take a lot longer than people expect. Now, what does that mean? Maybe a year, maybe 2 years, maybe people are expecting this to happen in 3 months. I just don't see it. Now, it could be possible, or at least the first iteration of it could be possible, but we've been seeing Bitcoin reserve after Bitcoin reserve at the state level getting knocked down recently. And that's not good. But again, they're trying to rush a lot of these things. And I think especially with the Bitcoin reserve, they have to really think it through and understand the longer term implications, how they're going to manage it, the security involved in it, and all of that. And that brings us back to the Federal Reserve combo, right? What is the Federal Reserve going to do in March? Personally, I don't know. I don't know what they're going to do in March or April or May. I don't think it really even matters because what they do then is already priced in. It's what they say they're going to do in the future, right? Are they saying we we won the inflation battle, which by the way, they may never say ever again. Like there was a point during the bear market where I was like, I don't know that the Federal Reserve is ever going to say that they won the battle on inflation because even 2% target inflation is still inflation. And so if you don't stay on top of it, it can go back higher or it goes too low, which is they would consider also bad. So are they ever going to say that they won the battle of inflation? I don't think so. So I don't think that's going to determine whether they increase or decrease the rates or the buying of debt or anything else like that, right? There's a lot of dynamics in play here. One of the dynamics is the value or the relative strength of the dollar, the Dixie, which we talk about all the time. And so the higher the Dixie goes, you would imagine the lower the price would of crypto would go because your dollar's more value, uh, it's more valued. When the value goes down, yep, the price of everything goes up. So I don't know. Over the last 6 months, we went from 109, almost 110, down to 106, while the 10-year yield for the rates, right? This is the debt rate, has been dropping fairly substantially. The Federal Reserve hasn't really done anything. We went from, it looks like January 2025, 4.8%, and now we're down to 4.3%. So that's a 0.5% reduction. Now, the Federal Reserve did drop by 0.5% over the last 6 months, but that was already priced in. So what is the market telling us here? Is the market and the 10-year yield telling us that it's pricing in a rate cut? That's possible. Maybe it's not even going to happen in March. Maybe it's going to happen in April or May or June. Or maybe there's going to be an emergency Federal Reserve meeting. Remember, back in 2020, the Federal Reserve said in January, we're not cutting rates. And then I think in the end of February or early March, they said, again, we're not cutting rates. And then the markets cratered. And they came out like 2 weeks before they shut everything down for the pandemic. They came out and they did an emergency rate cut. It wasn't enough to bring the markets up because the markets kept falling. Because once they had an emergency rate cut, the markets were like, oh shit, it's in worse, the economy or the markets are in worse shape than we anticipated. And then they just kept selling off. And it took a few months to kind of raise that back up. It took, the pandemic relief and the printing of $4 trillion to raise it back up. But that took 6 to 8 months till we saw kind of the bottom in March, April of 2020 till the end of the year in 2020 when the market started really driving up. Hopefully that doesn't happen this year. Hopefully we do see kind of this first half of the year move. But the Federal Reserve is still reducing their balance sheet. That's quantitative tightening. They're keeping rates the same. Still part of quantitative tightening. If they're not easing, they're tightening. If they're not tightening, they're easing. There's no in between. There's no like we're not tightening or easing. No, you're not tightening, you're easing. And if you're not easing, you're tightening. And so we want them to ease the economy and ease the market conditions so that the prices of valuations can go up, building can go up, starting new businesses and taking new deals. I mean, we're seeing not just at the Doge federal government level layoffs, we're seeing layoffs at company after company after company. A lot of companies going bankrupt, closing their stores, closing their offices, laying their employees off. And how is that going to impact the overall economy? It, like I said, the Federal Reserve may be too late, right? They may come out in March and say, oh, everything's great. The economy's great. And all those people that just lost their jobs and their company shut down, they're going to be like, wait, everything's not great. And from what I'm seeing, a lot of people who've been applying for jobs, they're not getting calls back. Hundreds of thousands of jobs. Well, I shouldn't say hundreds of thousands, hundreds to thousands of jobs they're applying for, and they don't get one call back, or they go to interviews and then they go on another interview and they don't get calls back because there's so much competition in the market because of all the layoffs going on. And so that is a net negative for the economy, but these are lagging indicators. By the time the Federal Reserve gets those numbers, those results, it could be 2-3 months down the road. And so if they wait, it could be worse for the economy in the shorter term. So I don't know if the market is just, we're seeing a blip, or this is going to be kind of a multi-month thing. But as always, I'm going to keep you guys up to date and bring you the latest happening right here on the channel. Let me know what you guys think about everything we discussed today, kind of all the different theories and possibilities for why the market has come down. Is it going to go back up? Let me know what you guys think down below, and I'll see you when I see you. Crypto on.